Okay, so picture this. You're a trader, right? But way back, centuries ago in Japan, and you've got this system you use for reading the markets. It's all visual patterns, almost like a secret code or something. Kind of cool, right? That's what we're going to dive into today. We're talking about Japanese candlestick charting.
We've actually got excerpts from this book. It's considered like the modern guide, to this whole technique, Japanese Candlestick Charting Techniques by Steve Newson.
You can just feel the history when you hold this thing. It's a second edition, classy gold cover, even the title's in kanji. And then get this, the subtitle, A Contemporary Guide to the Ancient Investment Techniques of the Far East. I mean, come on.
But before we get lost in translation here, can you break down for us what actually makes candlestick charts different from like your standard bar charts that most traders are used to?
Sure, yeah. It's a good question. Think of it this way. A candlestick, it's like it tells a story about the price action. You're not just seeing a snapshot. You see the open, the close, even the highs and lows all at once.
It's like a bar chart, but it shows you the emotion behind the numbers,
So I'm hearing like the emotions, you mean those are represented by the colors on the chart, right?
Exactly, yeah. So like white or green, those traditionally mean that the close was higher than the open.
Black or red, that means the opposite.
Okay.
And the length of the candlestick's body, that tells you how strong the buying or selling pressure was over that time.
So like a really long green candlestick. That
means the bulls are in control. Right. Strong buying, pushing that price up. Now, try to imagine seeing that on just a regular bar chart.
The information's there, sure, but it doesn't hit you the same way.
Right. No, that makes sense. It's definitely a lot faster to kind of grasp the story, like you were saying, when you see it visually. So we've got these elegant little candles, right? Each one telling a little story about what the market's doing. But the technique itself, this isn't like a new thing at all, is it?
Not at all. We're talking like potentially 17th century Japan. They were using it to track rice prices back then.
Wow. See, that's even older than I was imagining. What was it about that time, about that market, that made a system like this so valuable?
Well, think about it. Back then, information was slow.
Markets, they were way more vulnerable. Rumors, weather, you name it. Rice being, a staple in Japan, those prices would swing wildly. So these charts, they gave traders a way to make sense of all that chaos.
So it wasn't just about seeing the price of rice, it was about understanding like the forces at play, almost like the psychology of those early rice traders.
Exactly, yeah. And it let them spot those turning points, to sort of anticipate when, like maybe a period of really high prices, when that might be ending, or if there was a panic selling and when that might reverse. It was pretty crucial stuff.
Well, that's what's so interesting, right? Because even now with like all our technology and stuff, market psychology, it really hasn't changed that much, I
mean, fear and greed still driving everything. Yeah. The herd instinct, all that's what still moves those prices. But candlesticks, they let us tap into that. You know what I mean? We can see those same patterns of behavior from like centuries ago still playing out.
Yeah.
Right in front of us.
So it's like these patterns are like a window into the mind of the market, showing us what all those other traders years ago, what they were seeing.
That's a powerful way to think about it, yeah.
Yeah.
And Nison, he actually talks about this Japanese concept, Sakata. Basically, it means like gap or difference, And it's about spotting those moments where the prices just, they break out from those old patterns, Yeah. And it's a signal, like a shift in sentiment.
Okay, now I'm definitely intrigued, but connect the dots for me here. How does Sakata, this difference, how does it actually work, like practically speaking, with candlestick charting?
All right. So let's say there's this stock, and it's been in a downtrend for weeks now. So you've got this string of like long black candlesticks.
Yeah.
These bearish, right? Then out of nowhere, boom, long white candlestick, a bullish engulfing pattern. Breaks right through that resistance level of all those previous candles. That's Sakata right there. It's that break, that clean break from the pattern, like a signal, like, hey, maybe the sentiment's shifting here. Okay, so it's not just about like the one candlestick by itself. It's the whole context, right? The story that it's telling compared to what came before it, like a plot twist or something in a movie.
Yeah,
you're like, wait a minute, I thought I knew what was going on.
Yeah. Exactly. And those are the moments that this kind of charting, it can help you spot, maybe even anticipate if you're really in tune with it.
Now that's pretty incredible. So we've covered like the history, the visuals, even some of the philosophy behind it. But I'm curious, for you, someone who's like in the thick of it with the markets every day, what's the most compelling thing about this? What makes this technique so unique?
You know, for me, it's how it bridges that gap between like technical analysis and human intuition. Cause these patterns, these candlestick patterns, they're not just random, you know. They're formed by real trading from all these decisions, all these individuals making decisions based on their own analysis, their own emotions even.
So it's not just about memorizing a bunch of shapes. It's about understanding what those shapes actually mean, what they represent.
Yeah, it's like each candlestick, each formation, it's like a reflection of the back and forth between the buyers and the sellers.
And when you learn how to read it, this visual language, you're tuning into that, developing a feel for it. It's like the market's heartbeat almost.
Okay, you've sold me on this, but let's be real. Where do you even start? Should someone try to like memorize all those patterns in like Lawson's book?
Well, that'd be something else, wouldn't it?
Yeah.
No, it's not about. It's not about just like rote memorization.
Start with the basics. We've talked about a few: the doji, the hammer, shooting star. Learn those. Learn to really see them on a chart. Understand what they're telling you, and then you can start branching out from there.
So it's about like building up your candlestick vocabulary one pattern at a time.
Exactly.
Now, Nyssen mostly uses examples from like the Japanese stock market, right?
Yeah.
Does that even matter if someone's trading like U.S. equities or commodities or something?
That's the cool part. The principles they're universal. Doesn't matter if you're looking at Apple stock or crude oil, you know, a doji's a doji. That market psychology, those like moments of doubt, those shifts in momentum, those are everywhere, man. They transcend like borders and stuff.
So like a pattern,
Yeah.
It's like a word and the market. It's just the sentence that the word's in, but the meaning's the same.
There you go. It's all connected. Now, we should talk practically here, right? Like, can candlesticks be your only tool? Should traders throw out everything else they've got and just like stare at candles all day?
Oh, hold on. They're valuable, don't get me wrong. But they're most powerful when they're part of a bigger strategy.
Yeah. So don't abandon everything else. Just integrate this new perspective into what you're already doing.
Right. You can use them to back up signals from other indicators.
Yeah.
Maybe fine tune your entry and exit points, or even, you know, to challenge your assumptions. If what the price is doing doesn't line up with what you thought was going to happen.
It's like adding another tool to your analytical toolbox.
There you go.
You know, one thing that really struck me going through Nyssen's book was how he talks about how candlestick charting, as simple as it seems visually, it was like this closely guarded secret for centuries. And it makes you wonder, like, what was it really like back then for those early rice traders in Japan using this system, relying on it? What were they seeing?
Yeah, can you imagine, like huddled over those charts, the candlelight flickering, you know. Nyssen, he mentions that they really paid attention to the doji, especially after like a big price move.
Right, because a doji after like a long uptrend or downtrend even, it could mean that the momentum, it's dying down. Maybe a reversal's coming.
Exactly. Yeah. But they were smart, you know? They weren't just looking at one candlestick by itself. They understood like context. That each pattern, you had to see it as part of this bigger story that the market was telling.
So they were looking for like groups of patterns, confirming signals, just like we might use like modern indicators for today. It's kind of wild how much we can learn from those guys all those years ago.
Totally. And it shows you like the power of observation, of understanding how people act.
Yeah.
And how those insights, they work across different markets, across time even.
This has been eye-opening so far. We've hit the history, the psychology, the practical side of it. But before we wrap up, I'm really curious to see this like in action. You know, can you walk us through some real-world examples of these patterns actually like doing their thing?
You bet. Let's pull up the Nikkei 225. Back in the late 80s, Nixon, he actually uses this one in his book. So picture this. You've got this chart, right? Series of long white candles. Rally, just pushing those prices higher and higher. Bulls are like totally in charge.
Okay, classic uptrend. I can practically see all those green candlesticks just marching right up the chart.
Right. But then, right at the peak, Doji pops up. Now remember, that's our indecision signal.
Right.
Now a doji by itself, it's not a surefire, it doesn't guarantee a reversal, but its placement here, it's crucial. It's like after this long sprint, right? That moment where you pause, you're like, can I really keep this pace up?
Right.
You know?
It makes you wonder, like, were the people who bought in at the top, were they already starting to cash out? Like, was there doubt creeping in?
Exactly. And the chart, it tells you that doji immediately followed by a black candlestick, down day. And then another one, the market, it made up its mind.
So the doji, it wasn't like predicting the future or anything. It was reflecting that change that was already happening, like underneath.
Yeah.
A shift in sentiment, and then the price just followed.
Exactly. That's what's so powerful about this stuff. It's not a crystal ball, but it gives you clues about what the market's really thinking. Now, let's flip it. Let's look at a buy signal. Nissan, let's get this really cool example. U.S. Treasury bond futures. Same time period, roughly. So, picture this. Steep downtrend, long black candlesticks, pessimism everywhere.
Okay, got those red candles in mind. Everyone, like the bears are tightening their grip. So where's our candlestick hero in all of this?
Right. So near the bottom of that whole move down, hammer, remember that? A long shadow underneath. That's all that selling pressure. But then small body, often white or green, that's the buyers coming in, pushing that price back up before the close.
Okay, so it's not just the hammer itself, it's that it's down there.
Yeah.
Right, near support after that downtrend. That's what makes it a buy signal.
There you go.
Yeah.
And Nissan even points out that day that the hammer formed, volume spike.
Okay, so it wasn't just a couple of people dipping their toes in. These buyers were serious, putting their money where their mouth is.
Right. Volume, it confirms. It's like extra evidence, right?
Yeah.
That candlestick's not just a fluke. It might be the tide turning.
Man, I'm really starting to see how much nuance there is to this. It's like you're not just listening to someone's words, you're reading their facial expressions, their body language. Okay, so we've seen the doji maybe warning us about a top, the hammer hinting at a bottom. What about that shooting star we were talking about?
Oh, the shooting star. That one's really interesting because it tends to show up after a really, really fast price move. Like a warning, like, hey, things might be getting a little too hot here.
Yeah.
Meeson, he uses the gold market for this one. Great example. So gold's been on a tear, right? Strong uptrend, but as it gets closer and closer to this key resistance level.
Hold on, resistance level, just for people who are newer to this whole world, can you define that really quick?
Oh, yeah, of course. So resistance, it's like a ceiling, right, on the chart, price level, where in the past, the asset, it couldn't break through. So gold's going up, but it's running into this ceiling. And the sellers, they're probably hanging out up there.
So the market's like, should we keep going? I don't know. We keep hitting our head up here, and then boom, shooting star.
There it is. So small body at the bottom there, showing that initial push up. But then that long upper shadow, that's the bear saying, nope, not today, shoving that price all the way back down before it closes.
It's like the market jumped, hit its head, and landed right back where it started.
Yeah, and not a good look for the bulls. That shooting star, especially right there, that resistance, warning sign, that rally might be running out of steam. And you know what?
Yeah.
Nissan's example, that's exactly what happened. Shooting star, then a bunch of black candles. Reversal confirmed.
Man, this is amazing stuff. You've really made this come alive. And more importantly, you've shown how we can use it to understand what the market's trying to tell us. But where do we go from here? Nissan's book is a great start, but for someone who really wants to master this, what should they do?
Honestly, charts. More you look at, more patterns you'll see, the better you'll get at reading this whole language,
So don't just memorize the book. Develop that intuition, that gut feeling, where you see it and you're like, hold on, shooting star, resistance, volume spiking, something's up.
That's it. And don't be afraid to play around with it, Test it out, different markets, different time frames.
Explore, experiment, really get in there. Just like those race traders back in the day. They were like the original trailblazers, right?
Yeah.
Using their own eyes, their own instincts to figure out this whole world. And we still have it. Those candlestick patterns, they're like this timeless view into how the markets work.
I like that. It makes you think in a few hundred years, who knows? Maybe traders will be looking at our charts, trying to figure out what we were doing back in the age of algorithms and all that.
No, that's a cool thought. Well, on that note of market wisdom that that stands the test of time. I think we'll wrap up this deep dive. We hope you've enjoyed it, this little journey into the world of Japanese candlestick charting, and that you feel like ready to explore it, learn more about it yourself,